So I'll start off with this and we'll move on to the main platform now. And now you can check out. So we'll move on. This is our page. This is our cloud-based software. And we'll move directly to the portfolio section. And now we can see that we have created one of the model portfolio that we will be analyzing today. So you can directly click on this option and you can directly click on run so that you can have a full analysis on that specific portfolio. So now when we open the portfolio, so you can check out that we have given some kind of allocation over here. And you can check out the different kind of allocation over here, first of all, with the 7 different items, that is the components of the overall portfolio. So if what we can do is we can directly click on edit or save as option. And what you can do if you don't want the biased diversification in the overall portfolio, so you can directly click on equally allocate all of them, and you can directly update this one as well. So once this is updated, you can again click on run, and you can have a full analysis of the same portfolio as well. So starting off with the asset allocation, first of all, you can check out that there are different kind of 7 funds that we have consisting over here. And we have taken and we have come to consideration in the asset allocation. So first of all, when you come to this section, you can check out that there are different kind of asset allocation with the equity, cash, foreign equity, others, and the debt percentages as well. So as you can see the diversification in the asset allocation, you can click on this detailed view as well. And you can check out the overall derivatives and everything that is present in the overall portfolio. So when you open this, you can also check out that we are given some of the different kind of benchmark as well. So when you will be taking out this kind of portfolio, automatically the benchmark will be captured from here. And over here, you can see that we have taken the reference index 1 as the benchmark. When you come to the performance tab over here, so we'll come to this thing later. So why we have taken reference index 1 as the benchmark, I like to analyze that as well. So you can check out that we have an equity percentage of 90.44% only. And if you come down and if you click on this detailed view, just you can check out that we have a debt percentage of 0.29% only. So that is the reason what it has done is you can see the reference indices. So over here, this is some inbuilt benchmark that we have created from our end from NGEN Markets typically. And you can check out we have different on several kind of indices that we have presented on the basis of that. So we have taken 2 different indices, that is one of the Nifty TRI and one is the CCL bond index. Since we have fully 100% equity funds over here and only 0.29% of debt, so it has taken automatically the reference index that is 100% Nifty TRI. And on the basis of that, it will be automatically capturing and it will having the analysis on that. So now when we open the asset allocation, first of all, you can check out what is the diversification in them. And you can see all the different kind of exposures that the portfolio is consisting of. So when you come over here, you can see that HDFC Bank, ICICI Bank, they're having the highest exposure from this specific overall portfolio, consisting of these 7 specific funds as well. So now when you go ahead and you want to check out that why is this specific 5.64 percentages is available in this specific portfolio and from where you are getting this specific percentage as well, that also will be available over here. So for that, what you need to do is you just need to click on this I button. And from here, you can now see that it is giving all the portfolios diversified in a similar manner, but the exposures are coming from different funds in different manner as well. So you can see different fund has different exposure percentages, and it has totally generated and computed to 5.64% to the overall allocation of the portfolio. And you can check out different kind of stocks and each and every stocks that is present in the overall portfolio and what is the diversification in between them. So when you go ahead and you can check out, so what is the diversification in between them, you can click on any of the stocks for their analysis as well. So now when you check out what is the diversification in equity, cash or foreign equity or the others, you can click on any of the tab you specifically want to check out. So you can directly click on this specifically, like if you want to check out the foreign equity from where this 2.88% consists of. So you can directly click on this option and you can check out from where you are getting this specific foreign equities exposure as well. And you can see which stock is consisting out of this and from which fund you are getting this exposure as well. So you can click on this I button and you can check out that from Parak Parik FlexiCap Fund, you are getting an exposure of Alphabet Incorporation, and that is the exposure of 0.68 that is giving to the overall portfolio. So now if you can guess out and if you come to know about any specific knowledge about any stocks that it is not performing, so what you can directly do is you can click on the show all percentage manner and you can come down and you can see all the different kind of stocks that is available over here. And if you go ahead and if you want to diversify the portfolio in the different kind of equity sectors, for that you can also directly come to the equity sector option. And from here, you can check out from in which sector you are having the highest exposure as well. So when we check out this overall portfolio, we can directly see that we are having the highest exposure in the banking sector over here. So when we check out or we click on this banking sector, so we can check out all the stocks that consist or it falls under the specific sector equity sectors and with the percentage as well. So you can find out, and if you want to, and you think like in the upcoming days, pharmaceuticals won't be coming in consideration or it won't be giving better returns or performance, and you want to check out what are the stocks that it is holding in the overall portfolio. So you can directly click on this pharmaceuticals option as well, and you can check out like what are the stocks it is consisting of and what is the overall diversification or the allocation that it has generated, or what is the percentage of allocation that it has coming from the overall exposures from the portfolio that is also available over here. So now again, you can check this out in the same format, or you can directly go to the overview as well. And you can come over here and you can check this out. What is the diversification or from where you are getting the maximum exposures as well. So if you see the Sun Pharma Industries, you can directly click on this I button and you can again check out the exposure of that specific stock from where it is coming. So like this way, you can have a full analysis of this overall asset allocation and you can check out like how you can diversify the client's portfolio and how you can suggest out with the better funds as well. And from here now, when we move on, you can also check out like the concentration, like what is the diversification that you are having in the large cap or mid cap with the percentage as well of the total portfolio. Or else you can also click on this and you can check out like what is the equity exposure that you are having in the overall portfolio as well. And if you also want to go ahead and you want to check out like what are the funds that you are having. So in this fund section, you can directly check out like all the diversification you are having with the different kind of funds that is available in the overall portfolio. So next we will move on to the performance tab, where you can directly see that we have taken a reference index 1 as the benchmark and we have taken the rebased portfolio of as this specific model portfolio. You can directly check out how your portfolio is performing in consideration with the benchmark that it has taken directly. So over here, you can check out, you can obviously click on this, any of the indices as well, and you can choose your own benchmark to directly compare it with your portfolios. So now if you want to have a full analysis for the last 5 years, what you can do, you can directly change the start date from here and you can click on this change option and you can directly click on 5 years ago. So this is a specific time frame that it will be taking. And on the basis of that, you can directly have an analysis like how your portfolio that you have created is performing in consideration with the benchmark that it has taken. So you can also choose from any other benchmark if you want from the NSE indices, like then if you can directly search it over here, or you can also search under the BSE indices, and you can also choose any of the indices that you want to compare for this specific portfolio. Now you can directly come back and you can see that our portfolio's performance over here in this chart format, and it has, you can see that the black line that is the reference index 1, the benchmark, it is going ahead of the portfolio that we have taken. But sometimes after this section over here, till this moment, the portfolio was going behind the benchmark that we have taken. But after this specific time frame, that is 9th February 2021, you can check out there is a leap over the benchmark for this specific portfolio, and it has performed well, better than the benchmark over here as well. And you can also come down and you can check out like what is the cumulative outperformance. So during this time frame from 2019, so you can see there's a red color option where it is showing you the loss or the loss movement that it was going ahead. So when it was going not so better or not so good in comparison with the benchmark as well. But after 2021, during this 22nd February 2021, you can see that the benchmark has grown a very high surplus and it has gone up till date today. And now in this format, you can directly have an analysis of the portfolio in comparison with the benchmark as well. First of all, you can also check out like if you are seeing the asset versus the benchmark, you can see like what is the differentiation between the MTD, what is the YTD, and the 1 year, 3 years, and 5 years returns with the comparison with the benchmark as well. And you can check out how your portfolio has generated much more return than the benchmark that you have taken into consideration for the comparison. And you can also come over here and you can see that as we have taken at both the portfolio and the benchmark has started from a similar point, so that we can directly compare them and you can have a similar comparison between two of them, and you can check out that who has given you a better performance in during that specific time. And when you come to this side on the right hand side, you can check out like what is the cumulative return it has generated in comparison with the benchmark. So you can see that the cumulative return of the overall portfolio during the last 5 years, it has been 151.31 percentage, whereas the benchmark has only generated 100.11 percentages. You can check out like what is the total simple return that it has generated in comparison with the benchmark. So over here also you can check out that your portfolio, the portfolio that we have created, so you can directly see that how better or how much extra the returns that it has generated. Again, you can come down for the CAGR. In the CAGR option, you can check out like what is the CAGR it is generating in comparison with the benchmark. So when you will be checking out this thing, so you can see that the specific time frame that we have taken is 23rd October 2018. And for the last 5 years, if you are comparing with the benchmark, your return is much more higher than the benchmark over here. So like the same way, you can also check out the simple return and the annual volatility. So when you are going ahead for the volatility, so what the volatility we take as the component is the standard deviation. That is the risk parameter that we choose to compare across the benchmark with the portfolio, so that we can understand what is the risk profiling that we are taking under consideration. So you can see that the volatility of the portfolio that you are having over here, you can directly see how it is performing and how much lower your volatility is in comparison with the benchmark. So in that consideration with that, when you compare with the returns and the volatility, that is the standard deviation, that is the risk parameter that you are taking under consideration, you can see under this volatility of 16.65 percentages, your portfolio has generated an return of approximately 151.31 percentage. Whereas if you are going ahead and you want to have analysis on the volatility, you can see your benchmark that you have chosen or it has taken into consideration, it has generated 19.02 percentage of standard deviation, whereas the return was only around 100.11 percentage over. So like this way, you can directly have analysis and you can check out like what is the differentiation between them. So same way, you can also check out the Sharpe ratio. So as the Sharpe ratio is much higher in comparison with the benchmark, why is it so? Because it is also showing you that the volatility it is having, it is much lower than the benchmark that we have taken into consideration. And the benchmark is having a high standard deviation in comparison with the portfolio as well. And you can check out within that range, with a lower volatility, the portfolio is generated a much higher return in comparison with the benchmark, whereas only the benchmark has generated with 19.02 volatility, with it has generated only 100.11 percentage of returns. And you can also check out why the Sharpe ratio of the benchmark is so low in comparison with the portfolio as well. So now if you go ahead and if you want to directly compare it with the benchmark, like what is the cumulative excessive return that your portfolio has generated over the benchmark, so you can directly check it out over here. So over here, when you consider the if you subtract 100.11 percentage from 151.31 percentage, you can get this 51.20 percentage. That is the cumulative excessive return that it has generated over the benchmark. Again, the same way, you can also check out like what is the annual excessive return on a compounded basis it is generating, or what is the annual excessive return, the simple return it has generated as well. And you can also go ahead and you can also check out like what is the up capture ratio and the down capture ratio. So these two things will show you. So when the market is having a bull run, so during the up capture ratio, so what it is having is the portfolio and comparing with the benchmark, it will be showing you that when the benchmark is going up, how did your portfolio perform during that specific month on month wise. So you can directly click on this I button and you can check it out. Like when your portfolio started giving a profit, so that is from October 28. So the date we have chosen into consideration is that is 23rd October 2018. That is just 5 years from today. And you can check out when it has started. So it has started generating a positive returns, but your portfolio has also generated positive returns during that time frame. But after some time, when you can check out in this chart format, your portfolio has gone down in comparison with the benchmark that we have taken into consideration. So during that time frame, if you consider this, then you can check out during the November, after that, April 2019, May, and that moment it has started going below. And it has generated a negative return as well during that time frame as well. So you can see the time frame after that June 2020. So during that time, the portfolio couldn't perform much higher than the benchmark it has considered. And after 2021, you can check out it has generating a high return in consideration with the benchmark that we have taken into consideration. So the ideal up capture ratio, that it means, like, if your client is willing to have an aggressive portfolio, so it can only be a better portfolio when it will be having a up capture ratio that is more than 100. So it means it is beating your benchmark in all the times in each on month wise. So when you can see out what is the total return it has generated, so you can check out the benchmark has generated around 60.83%. And over here, the return that the portfolio of yours has generated, that is 64.61. So like this way, you can have an analysis and you can find out that how better or how well your portfolio has performed on a month wise. And the similar way, you can also have a comparison of the down capture ratio. So when there is a bear run going on, so you can directly have an analysis on that as well. So it has, your benchmark is going down at that moment. So you can see, so during when it started January 2019, so the benchmark started falling, but the portfolio has fallen more. So you can see what are the losses it had approximately, that is much higher than the benchmark that we have taken into consideration. Like this way, but later on when your portfolio started recovering, you can see there was not such higher loss that happened in comparison with the benchmark as well. So now over here, what we can consider is, like, if your down capture ratio is lower than the benchmark that we have taken into comparison, and that is lower than 100, that means your portfolio is giving you less loss than the benchmark that you are considered in comparison over here. And with that thing, you can directly have analysis and you can check them out, like how diversified they are. With the returns over here on a month wise, you can check them on a chart format, like each and every month, how it is generating the overall portfolio. That will be also available over here. And you can also see the yearly chart as well. You can see on a year basis what is the total return it has generated with their yearly statistics as well over here. So you can see for the number of months or the number of years, how many times it was up or how many months it was going down with the average, what is the volatility. You can also check out what was the best performance that it has generated during all the 61 months and the lowest return that it has generated for the worst condition. So like this way also, you can have an analysis on them and you can check them out, what is the performance it is generating in comparison with the benchmark. So now what we'll do is we'll move on to the contribution tab. So this is another feature that we'll consider into consideration. So over here, what you can do is you can check out all the contribution of the funds that you have taken into the it is the component of the overall portfolio. So you can see like all the 7 funds will be appearing over here. And when you come down, you can see what was the total portfolio return during that time frame that we have seen before it. So this is the total return of the portfolio that it has generated. And these are the components that the portfolio is having. So now over here in between, out of this 151.31 percentage, total of 19.13 percentage of that specific return has been contributed by Nippon India Small Cap Fund. And followed by, you can check out like the HDFC Mid Cap, followed by the Parak Flexi Cap and Nippon India Multi Cap Fund as well. So like this way, you can check out what are the differentiation and which fund has given you the best returns during that time frame as well. So just overlook this tabular format. I'll come back to this thing as well. So you can check out all the returns that it has generated and what is the percentage of return that it has contributed to the overall portfolio. So now when we move ahead to this tabular format, you can also check out this the fund, the Nippon India Small Cap Fund. It has given around 216.21 percentage of returns. And this you can also check this thing over here as well. So now when you are we will checking out. So you can directly click on this Nippon India Small Cap Fund. So it will be opening in another tab. So I'll just show you. So what is the performance it has generated? So like if we choose the start date that we have taken into consideration, yeah. So over here now you can see like what is the return, what is the cumulative return it has generated during that specific time frame. That is 216.21 percentage. So over here, when you can directly come back over here, you can see that it is same, that is 216.21 percentage over here. So like this way, what you can do is you can check out for the last 5 years, what is the contribution to returns, what is the percentage of return it is having, that is also available over here. And now what you can do also, you can check out of this overall portfolio returns, this specific funds had a similar diversification in the components. So all of them were having a similar allocation between all of them. And in between that, what is the contribution of return that is generated to the overall portfolio, that will be also available over here. So now what you can do, you can check out that the portfolio's composition, out of that you are getting the overall returns. But if you want to see that in during any specific time format or in any other time, how your portfolio has performed. So what you can do is, or how the components of your portfolio has given you performance. You can, that also will be available over here. So what you can do is you can check out that we have taken it from 23rd October to this specific time frame. So till we can choose this 21st of February. So what you can do, you can choose that specific time frame that will be the pre-COVID period. So you can choose that time frame. I'll just take 2019. Just a moment. Just 2018, 23rd. Yeah. And we can choose up to the just pre-COVID, that is 2020. And we'll take for February last. Yeah. So during that time frame, how the portfolio has performed or what kind of return it has generated, that will be also available over here. So until now, what we were checking out, we were seeing that all the funds were giving up a positive returns over here. So all of them were upside. But now when we are considering or we are comparing with all of them, now we can check out that ICICI True Value Discovery Fund, it has given us a negative return out of this. And the total portfolio return during that overall time frame was only 8.42%. So why that specific percentage of return we have generated? You can also check this out from here. So you can see all the returns that it has generated is given by Mira Asset Emerging Blue Chip or the Parakparik Flexicap Fund. So like this way, you can have analysis why your portfolio went down during that time frame and what was the contribution of the funds during that specific time frame as well. So that kind of analysis will be also available over here, and you can check them out directly from this specific option. And after that, what you can also do is, once you have checked out how your pre-COVID time frame has performed, you can directly choose the specific time frame after COVID, post-COVID also. So you can choose a specific time frame after from March, 1st of March. Okay, 2nd of March, and we'll just consider last day, that is the today's date. So during that time frame, how the components of your portfolio has performed, that will be also available over here. So we can just take 26 and we can click on run. So now you can see that there is a high rise in the overall portfolios, and you can see all the performance of the tabs. You can see the total returns, the performance has been generated. You can see what is the total portfolio returns and allocation and everything over here direct. So like this way, what you can do, you can directly check them out. You can see how the portfolio components have been performing and what is the overall allocation it is generating to the overall portfolio as well. So you can click on this and you can check out what is the return contribution and how it has generated returns to the portfolio as well. So like this way, we'll move on to the next parameter. So this was the second thing that we have taken into consideration. And our last topic that is the drawdowns tab, how we can check out the top losses and how we can take into consideration how the portfolio has been performing during the time frames and how it can recover from specific losses as well. So if you now check out this specific drawdowns tab, what you can check is you can see that in different time frame, different kind of losses, and the portfolio had different kind of losses in different time frames as well. So if you can see what is the loss percentage it has generated during a specific start date. So if you come to this chart format as well, you can choose this specific time. So like you can hover around your mouse and you can see that during time frame, the specific time, pricing was 116.97. But after that, it started falling and it started falling till 23rd March 2020. And after that, you can see what was the ending price as well. That is 74.21. So now after the loss has been done or it is over, you can see it has started growing up and it has generating the profits as well. And after how many days it took to recover from that specific loss, that will be also available over here to analyze directly. So you can now check out like what is the recovery date and how many days it is normally taking to recover from the losses as well. So when you choose that time frame and you can drag this specific time to see what are the losses period and how it is performing, and you can check them out in this specific format as well. And this will actually help you to understand what is the strength of the fund that you will be suggesting to the clients directly from here. So if you're suggesting and you want to justify the portfolio, that how the portfolio performs, so you can show them that during only 1 or 2 times, the portfolio has taken a much longer time of 164 days, and another one is 102 days. So one is during the 2019, and another one was just before COVID. So after this is the two time frame that the portfolio has taken a much longer time to recover from losses as well. After that, if you go on and you can see all the other 8 losses, the top 8 losses ever happened. So it had the highest recovery time was around 42 days. And it has recovered from 40 within a time frame of 42 days of the specific loss of 15.72% as well. So like this way, you can directly understand and you can check out the strength of the fund or the overall portfolio, how it is performing from here directly. And you can click on this research zone to check out the full tab of the chart format from here. And now we'll move on to the last tab that we have, the scenarios tab. So over here, what we can do is we can directly check out in different time frames how the portfolio has performed in comparison with the benchmark. So now if you want to directly see that how the portfolio has been performing in different time frame like the demonetization or something like that, or if you our portfolio has started from 2019 or 2018, 23rd October. So what you can directly do is you can come to the scenarios option and you can check out like if you want to see just the post-COVID, how your portfolio has performed in a specific scenario option. So you can also check them out over here. So for that, what you need to do is you can directly create your own scenario. You just to need to give a name and you can directly give the start date and the end date. So like what we have taken into consideration is from 2018, 23rd October, and we can choose the end date as the February of 2020, just before the COVID hit. So we can directly go to February from here, and we can choose the last day of February. So now what you can do, you can save this custom scenario directly from here. And from here, you can click on this option. So these are the scenarios that you will be creating from your side. And now you can directly compare how the portfolio has performed in comparison with the benchmark that we have taken into comparison. That is the reference index one. So over here, you can see what are the start date and the end date that we have taken into consideration. And what is the excess return that the portfolio has generated over the benchmark as well. So that is also available and you can have analysis on them. And you can check out like what is the correlation between their performance over here. So now what you can do is you can check out like what is the return it has generated, like that is 8.42%. Whereas the benchmark that we have taken into comparison, over here we can see that it has given us a benchmark of return of around 12.08%. Whereas if you go ahead and if you check out the performance tab, you can see that during that time frame, our portfolio was going behind the benchmark that we have taken into consideration. So like this way, you can check out the scenarios and you can see over here, the volatility that the portfolio had was around 12.78%, whereas the benchmark had a higher volatility in comparison with the portfolio. Again, if you want to see after COVID is done, just post-COVID time frame, how your portfolio has been performing during that time frame. So that also you can create, you can just give the name and you can give the start date and end date. So like just we have taken as 2020 March, we can take the start date of that specific post-COVID time frame. And we'll take till today's date. And you can check them out how now your portfolio has been performing in comparison with the benchmark. So you can choose the specific time frames from here directly. And you can click on Save Custom Scenario. Now, when you choose this specific thing till today, you can click on this post-COVID, just a moment. So over here now you can analyze them and you can check them out, how your portfolio has performed in comparison with the benchmark. Your benchmark has generated 79.63% of return. Whereas if you consider our portfolio that we have taken into consideration, it has generated around 133.70% of return. And now you can again go back to the contribution tab and you can see that we also have the similar kind of returns over here from here. And what is the composition or what is the contribution of return it has generated to the portfolio, that also you can check it out from here directly from the contribution tab. And you can come to the scenarios tab and you can see what is the total cumulative return or the excess return it has generated over the benchmark from this specific section. So you can see that what is the excessive return that the portfolio has generated with the correlations. And if you consider the volatility also over here, with a lesser volatility, our portfolio has generated a better return in comparison with the benchmark as well. Whereas the benchmark had a higher volatility, but it has also generated a lower return in comparison with the portfolio. So this is how you can directly check out, or you can have a full analysis of the portfolios and through the drawdowns or the scenarios. And you can also check out the asset allocations, the contribution and the performances as well. And once you are done, and if you want to share a proposal for your client, what you can do is you can directly click on this PowerPoint icon. You can directly click on this option and you can directly give an amount as well. So if the client is willing to invest an amount of 1 crore rupee, or if you want to just create a model portfolio for them as well, what you can do is you can directly give the amount as well. Like if you want to create a 1 crore amount based portfolio, you can directly click on it and you can directly click on create PPT option. So once you click on this create PPT, a PowerPoint report will be generated from here directly like this way. And now you can check out the overall PowerPoint report that you will be generating with the own company name and logo that will be presented over here. And starting off with the different kind of positions that you can check out, like what is the holding it is having. So if you are doing an asset allocation on the basis of that, you can directly come back to this option and you can click on this create PPT option and it will be creating like this form. So you can open this one. I'll just show it to you with the equal distribution or the equal allocation. So you can see the same portfolio like this way. And over here, all the amount has been equally distributed over here with the holdings, like all the funds name. You can check out like the 7 funds that we have over here. You can check out the exposures, as we have seen that HDFC Bank and ICICI Bank had the highest exposure in the overall portfolio. With that, you can check out like what is the amount also that it has been generating, or it has been diversified through that specific stocks as well. So next you can move on and you can check out like what is the overall asset allocation among all the different kind of sectors. So like you can see that the equities, or what is the cash percentage, the foreign equity, what are the others, or the debt percentages, that with the total amount as well. With that, you can check out what is the position concentration that it is having with the top 3, top 5, top 10, and top 20. And on the right hand side, we have also provided with the equity market cap exposures. You can move or hover around your cursor to check them out as well. With this, you can also check out the ratings exposure with the total overall percentage as of the total portfolio. Followed by that, you can also check out like what is the equity sectors that it is applicable or it is present in the overall portfolio. So you can again move on, you can check out all the different kind of sectors that it is present, and you can directly present it to the clients as well. So this will actually help you to check out, and you can also see the performance of the overall portfolio that we have taken into consideration. With that, you can also see the price statistics and the excessive returns over benchmark and the relative statistics as well. And lastly, we have the rolling analysis that you will be doing on the basis of 265, 20, and 70 days. You can have a full rolling analysis on them with the volatility analysis as well. With the lastly, the drawdowns that you have taken into consideration while checking out what is the strength of the overall portfolio and how it has performed, or how it can recover fast from the losses as well. And lastly, we have the disclaimer. So like we have also given a disclaimer, like if you want to share it with the clients, that can be also changed from our platform. So this was all from my side. So if you now have any kind of queries or question, you can unmute yourself or you can type in our chat box as well.
If anyone has any questions, please do let us know. There is a question on the overlap tab on the chat. So Ankush, could we just go to the overlap section? Yeah, so this basically shows in this portfolio, you've got 7 mutual funds. So it looks at the individual holdings of each fund and then figures out which are common. So in this case, if you take an example, let's say, just click on any number, there you go. So we got 48% there. And when you hover over the 48, you can see on the top, it's showing HDFC. Let's go back there. Yeah, HDFC Flexi Cap. And on the left, in bold, you can see ICF True Value Discovery Fund. So that is the overlap between these two funds in terms of their underlying holdings. And when you click on it, you actually get further detail about how that overlap has come. So here you can see for each fund, side by side, what the underlying holdings in each stocks are and what is the common portion. And the total of the common portion is 48%. So we can say that between these two funds, 48% of the latest holdings from the disclosures are exactly the same. So that might cause some alarm for you because it's quite a high number. And in this case, you might want to just keep one of these two funds because there's not much point in having two funds which are having very, very similar positions. Any other questions, please let us know. There's a question here saying how to create model portfolios. So yeah, I mean, we provided quite a lot of tools here, and there are many ways that you can arrive at a portfolio that you can use for clients, a model portfolio. So ideally, the process starts in the fund section where you look at the screener. This is where you kind of get to select the categories that you want, and you can do them one by one, or you can do a few at a time. So for example, in this case, let's just select large cap funds. And let's say you want to pick up a couple of decent large cap funds. So you select that, and then you use the sorting on these columns to pick out the best funds based on your own requirements. You can also obviously filter them on the top, minimum AUM, minimum age, Sharpe ratio, etc. And as you start to filter the large cap funds down, you might find, let's say, 5 or 6 large cap funds that you think may make your shortlist. So the way you add them to your shortlist is basically, so Ankush has just put some filters here, and then you can sort them on the basis of anything you want, any return stats, for example. And once you do that, let's just pick anything. Let's say Sharpe ratio. So you just click on the Sharpe ratio header, and it's basically sorted all the funds in the Sharpe ratio. You might pick out the top 5 or 10 large cap funds here. So the way you do that is you basically click this left button. You have to scroll all the way back left here. And what it does, it starts to add these funds to a list in the compare section, which is the next section. And the process that we just showed you, you can do that for different categories as well. And take your time and kind of decide a short list of large cap, small cap funds, etc. And then when you go to the compare section, you will see that your list is building. So if you go to the compare securities tab now, so this is so these are the funds that Ankush just clicked on, and so obviously you can keep this process going and keep adding to this list. Remember, you can save this list as well on the top. And then you further drill down to various different parameters. You can see there's a lot of tabs here. And based on these, you might shorten this list, take some funds out. And once you're happy with, let's say, a bunch of 10 or 12 funds, you convert them to a portfolio by clicking that button. There's a convert to portfolio button on the top. When you do that, it then takes this portfolio and saves it to the portfolio section. So this one's called from compare 45. So Kush, let's go to the portfolio section and load this I mean, obviously, this example, we just got large cap funds, but you get the idea. And so here you can search 45 or something, it'll show up. There it is, right at the top. And then you run it. So now what it's done is the final step is obviously what kind of allocations do you want to have to each of the funds that have made your top list, basically. Now here by default, we will allocate them equally. But obviously, there ideally should be a better method to do this. So once you have gone through the results of this portfolio that we just created, you can click on the Improve button on the top, and that helps you get some nice suggestions for how to allocate to these funds in maybe a better way. And here you get various different kind of options of allocating your capital to these funds. So we have 6 suggestions in the dark blue and the light blue. And if you like any of them, you can save them. And this is kind of a simple process where you can go through kind of various different filters and parameters and come to a short list, and then finally decide the portfolio weights that you're going to put on each fund using the optimizer. Or you can use your own kind of own idea if you want to just allocate the funds on your own. And once you do that, obviously you save it in the portfolio section and you keep it saved there. And you may make 5 or 10 model portfolios. And when you get new clients or existing clients, you load that portfolio into the system using the statement analyzer, and you can easily compare these 2 portfolios side by side, a client on one side and the model portfolio on the other side. So that's a very short explanation. If you want to go through it in detail, please just write to support@ngenresearch.com and we'll arrange a separate training session for you. Any other questions, please let us know. Okay, if there are no other questions, Ankush, we can close for today. Ankush, are you there?
Yes, sir.
Yeah, I think we can close for today. There are no further questions.
Okay. Thank you so much, everyone, for joining this webinar session. So please stay tuned for the webinars upload. We'll upload the webinar session in YouTube and the upcoming week as well. Thank you for joining once again.